You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Welcome back to Mining Stock Education. I'm your host, Bill Powers. It's 2023, and we're getting a trader's perspective, not only on the markets this week, but for this year. So Nick Santiago of MiningStockEducation.com joins me. Nick, you have over 30 years experience trading. You view the charts, which you see as human behavior, represented on those screens behind you here as we talk. I can see it on the call here. What is your best call? What is your most confident call for 2023 as a trader?
Well, that's a good question. But what I'm going to say, Bill, is that this is going to be a trader's year. This is not going to be a bull market, bear market that we're used to seeing. We're going to have a lot of choppiness. I just did a 2023 market outlook for all of my members, and I called it choppy waters ahead. And I do think that's what we're going to see. We're going to get these big rallies like what we're seeing now, and that was anticipated. And then we're going to get some big sell-offs. I ultimately believe that the stock market will make a new low this year as well. So this is definitely going to be what we call choppy waters ahead. You're going to have to know how to navigate the charts. If you don't know how to navigate the charts, you might want to just sit on the sidelines. I mean, this is going to be rough. And 2022, you saw some stocks get really just decimated beyond belief. And that's going to be the case going forward too. You're going to have some really nasty sell-offs, and then you'll have some big bounces. But if you're not, if you're not really versed on how to trade these markets or haven't seen them before, it's going to be tough.
What about trading in January? What are some patterns that we historically see as a trader in January?
January, it's a very tricky month because, especially when you're coming from a bear perspective, when you're coming from a bull market, everybody looks for that typical Santa Claus rally, so to speak. And then, the markets just rally up in January, called the January effect. This time around, we didn't get a Santa Claus rally. Santa, showed up in October, and then he took Christmas off. This time around, I think you're going to get a January bounce. That's what we're already seeing. That's what I had told my members the week prior to the new year. I said, hey, we're going into January. We're going to be choppy here. Don't fall for this bear pattern. We're going to move up. And certainly that's what happened. So, right now, I think we get more of it, but I'm not so certain on how long this will last. It's just really going to be more of a fake out than anything else. It's not going to be a sustainable move.
What's your best trade for the China reopening?
Bill, I stopped trading China stocks about a year ago.
No Alibaba in the portfolio anymore?
No. And I used to love to trade the Chinese ADRs, JD.com, Baidu. Alibaba, they were some of my FXI, which is an ETF. They were some of my favorite trades. And I just saw something not right there. And I said, wow, this isn't really acting correctly. I don't know what's going on. And about a year ago, I told my members, we're no longer going to trade the Chinese ADRs. I have no advantage. And only time I trade anything is when I have an advantage over the market. If I don't have an advantage over the market, I don't even want to be in it. That's pointless. I'm not a gambler. That kind of activity doesn't excite me. I want to be in the market when I'm the house. I'm the casino. I don't want to be the guy sitting at the other side of the blackjack table with a rum and coke in his hand. That guy is going to go home a loser. So, for me, I let the market put me into a trade. I don't ever force it.
So if you're at the poker table and you don't know who the sucker is, you are the sucker. Is that what you're saying too?
That's exactly what I'm saying. And, it surprises me still to this day and age how many times, people just want activity. They just want to be in something. They really don't even care if they're losing in it. They just feel like they need. And that's a gambler's blood, I guess, and unfortunately, the stock market has become like a casino, and that's how people treat it. But I'll never treat it that way. For me, it's about mathematical formations, chart formations, calculations, and I take it a very, very scientific approach, and not the Fauci science, real scientific approach.
So with the China reopening, would there be any derivatives you would maybe bet on? So like oil, people say that demand is going to go up, oil consumption will go up. Therefore, USO, how do you think that might play out?
Yeah, well, I got to say, I haven't really been overly impressed with the pattern in oil as of late. The pattern hasn't really been all that great. I know oil's getting a bid today. We keep hearing, China reopening, oil pops, and next thing you know, they shut down or lock down 25 million people in an apartment building. And the next thing you know, oil goes lower again. So the pattern in oil hasn't been the greatest. I love it long term. Let me tell you, I don't even think we've seen the move in oil over the next couple of years. It's going to explode like most commodities will. But with that being said, these things aren't ready to go just yet. So I think you can nibble on some nat gas. I bought some nat gas call options recently. I think that's a way to play a bounce here. I do think that I have a floor for nat gas coming up if it does make a new low. So I'm not even really concerned about that. I think nat gas is putting in a definitive bottom on this recent so-called mini crash that it's had. But oil still could have some more backing and filling. Longer term, I love it. Short term, there's tradable bounces in here, but it hasn't been a great pattern that I would get involved in yet.
Are there any economic numbers you're watching?
No, I don't even care about economic numbers.
You do listen to the Fed, though, right?
Well, I have to listen to them because they cause these short-term reactions. So outside of them, I honestly could never tell you even what the Fed really says or what the economic numbers of anything really are. I don't believe them. I've never believed them. I don't. If you ever look inside of like a job report, which we just had out last Friday, if you can make heads or tails out of that, let me know, because I've been looking at it for 30 years. I can't make heads or tails out of that. It's just so silly how they come up with these numbers. But it moves markets, it causes reactions, and that's why we got to pay attention to them. What I always tell my membership is, don't worry about the numbers. Don't even care. I can't even tell you what the last CPI number was. And that's been the market mover in 2022. But, don't worry about it. Just worry about the reaction. We watch the patterns and we watch the levels. And when they get there, that's what we trade.
Commodities have been the best performers last couple of years. Goldman Sachs says they will continue to outperform in 2023. I remember you saying on the show recently, you rolled your eyes for audio listeners only. You come from New York, right? So you don't swallow a narrative when it's first fed to you. I guess, what are your comments on that, Nick?
Goldman Sachs is telling you something. You better run the other way. I mean, these guys are as close to snake oil salesmen as you can find. So, I just laugh at that stuff. One of my great trades that I've ever had was in 2008. Oil, was approaching above $140 a barrel. And I never forgot this. I had a GAN level. As you know, I'm a GAN trader, and I had a GAN level, and I gave it out to my members. And that next day, Goldman Sachs upgraded oil to $200 a barrel. The level I gave my members was 145. It got to 145 and change, or maybe it got to 147 and change. I can't remember the exact number, but right in that vicinity. And oil collapsed. It absolutely cratered. And I wrote that thing down, and it was just off of a Goldman Sachs upgrade. So, I'm not saying they're all bad guys at Goldman. I'm just telling you, when they feed you a narrative, just remember where it's coming from. You got to be a little bit careful.
Okay, so we covered oil, gold. We talked about a gold retest down to 1450 or 1500. You still looking at those numbers? Because a lot of gold technical analysis that I've listened to, they're like, hey, it's looking good. Triple bottom. We're on our way up.
Gold has had a great bounce. And I told my members I thought gold was going to go to, I believe it was 1875 is the number I gave them. So we've tackled that today. We're at 1880. Now I would take my gold bull costume off and put that in the hamper and just wait it out a little bit. But what I think is going to happen is everybody right now is seeing the dollar decline, and that's gotten everybody. The Fed has talked about slowing rates, but they're still doing a quantitative tightening. I think when the dollar starts up again, gold comes back down. You'll go to that 1,500. I'm not so sure we'll see 1,400 anymore, to be honest, Bill. I think we'll be more like in the low 1,500s, and that will be the lifetime buying opportunity. When gold does that retest, that will be the time where it just doesn't look back. So again, I still stand by it. I've been looking for that when gold was above 2,000. I said it would go, down to 1,450 to 1,500. Now I would probably say 1,500 would be the floor.
And this year too, Nick, you would expect it this year?
I think there's a good shot this year. Yeah, I do think there's a real good shot we get there this year. And if I'm wrong, so be it. I own a lot of gold. I own a lot of gold bullion. I own, a lot of gold
products.
Is
the silver bar still on your desk there behind you?
Oh, absolutely.
It's a
right there. Yeah.
paperweight.
That particular one is, I keep a 10 ounce there for a paperweight. I keep a coin there for a paperweight. But, I've got 100-ounce bars I could build a stoop with. So, again, I've been accumulating this stuff a long time ago. And, just to go back real quick, Bill, silver got to $18 and then had a really big rally. And I told my membership it had to go to 1750 Pierce before it was going to be the actual buy level. And it did that on September 1st. And look at the move that silver has had, right? So, I did pretty well with the silver, the call. And, I had call options of almost 200% in gains. I had swing trades upwards of 20% in gains. I mean, it was really a very nice trade, to say the least. It was actually better than the 15% that I'm generally happy with.
Yep. And you influenced me in one of our conversations a few months ago when I asked you about only making 15% gain on some of your trades, one of the comments in the YouTube. And you're like, Bill, anybody who would say that doesn't understand the markets. If you can scalp 15% in a week, that's a good deal.
That's a great deal. And you know what? It just surprises me, but it just proves the point that people are so much into the gambling, right? They're just looking for these big mega scores, and you'll get that from time to time, but they're once in a blue moon. It's an anomaly. You're not going to get that on a consistent basis. I mean, anybody who doesn't think 15% is a good move is absolutely crazy. It's a great move, and again, that's a great trade in the stock market. It's not even a good trade; it's a great trade.
We've seen Newmont move up the last 2 months. What's your take on GDX and GDXJ relative to the gold price? Or what do you see in the charts?
Yeah, so the gold miners have had a sensational run, especially since gold picked up, right? When they were struggling, but you could see they were leading. I remember coming on your program saying, gold miners are where you got to watch now. They're showing, they're going to start to outperform. And Newmont, which was decimated after earnings on 2 separate occasions, has made a storming comeback. Agnico Eagle Mines, a bunch of them, right? It really doesn't matter which one. They all kind of birds of a feather that flock together. But the GDX, I've calculated my resistance is going to be around $33.25, $33.50, around there. That's where, you should step out of them, take profits, or trail your stop loss. You don't always have to get out. I could be wrong. I'm humble enough to admit sometimes I'm wrong on these things. But I would take profits there and then wait for a pullback or wait for some kind of consolidation. And if you own gold miners, whether it's the GDX or the GDXJ, which is the junior miners, I would already have trailing stops in there because, like I said, my gold objective was just met.
What about platinum? You following that market at all?
Yeah, I played platinum several times and made good money on it. And I think platinum's probably headed to 1,200. I love what it's doing. But again, it's overbought here and it needs to pull back or consolidate, then it'll make that next leg. Everything in the precious metal space, I'm even out of all my silver. So I'm out of all my silver trades. I locked them, closed them all out, and now I'm just waiting on the sidelines for the so-called pullback that hasn't come, but I hope it does, and I'll be jumping back in because silver's going well above $30.
Can you share your jumping back in level for silver?
Well, I would certainly do it, but it's not necessarily about the number. It's going to be more so about the pattern. And right now, silver's been stalling up here, really struggling at around $24 an ounce. It needs to pull back. I couldn't say if it's 19. I couldn't say if it's 20. It's really just going to be about the chart pattern. But what I would say is become a member and trade it right back with me.
I thought you don't sell your newsletter, Nick. You're like a soft sell. That was a hard sell.
I don't sell it, but you know what? People didn't believe it. I came on your show and I told everybody right here that was going to break out. I mean, and I bought a bunch of silver bullion at that point in time for my members. We were paying $4 over spot. Now I'm hearing people paying $12, $15, $18 over spot. So, that's what the service is about, presenting, good ideas for people when it's time. And and I laugh because so many people just want to, hear what you have to say, but they don't ever really want to come and join you.
With the silver charts, I've had people on the show in the last couple of years to where they say, if we break through $30 an ounce, it's going to fly to 50, that there's not much resistance between 30 and 50. Is that what you see in the charts too?
Yeah, but I couldn't make that assumption just yet, right? So I would have to say right now I've calculated to about 33, 34. That's the next leg higher. And how I do it is when we approach that next leg, if we take out what I like to call my break points, it's not something I teach. But if we break out of that break point, then we're going to go test that next level. Obviously, 50 is the old high from, I think, 2011. So everybody's, keying off of that, obviously. But I couldn't say that just yet. There's a chance if the right pattern forms, it goes even higher than that. But, right now, I wouldn't be able to say that with accuracy. I just tell everybody the next leg up will take us to around 33. The same way I was able to say, when we were at 17 and a half, the leg up should take us to 23, 24.
Are you in any agricultural or fertilizer plays right now?
No, what I own right now is Tyson Foods. That's as close as I've gotten to it. I don't dislike the ag plays right now. I do think they could be setting up. They just never quite got to my numbers. I'm almost too pinpoint specific with numbers sometimes. I wait for these things to get there. But I bought Tyson Foods at, around just under $61. That's at, almost 66 and a half now. I've taken half off. I did it with an option as well. I made a quick 24% and change. So I like that one right now. And, there's some different equities out here that present opportunities, but I'm very selective. I want those stocks on sale, and I want them at my levels. And, I'm not much room for negotiation with me.
When you're looking at an IPO, do you completely avoid it because there is no chart to study, since that's how you make your trading decisions? And how long does it have to be trading before you might buy or sell or buy?
I won't touch an IPO at all. I haven't been in an IPO since I was a kid. So, and when I say a kid, I'm talking in my 20s. I want nothing to do with IPOs. I don't buy into the story.
Even when those SPACs went up 10 times right out of the gate, Nick, you don't even mess with it.
Look, give you another example. Bitcoin. I could have owned Bitcoin in 2008. I wanted nothing to do with it because I didn't understand it. I didn't know who created it. I don't know where it came from, and I've never been a part of it. So, I missed that. SPACs too. Special purpose acquisition company. That's just too long of a term for me to get involved. I don't like them. I'm not saying they're all bad, but if I don't really understand, I like solid companies. I like companies that have a history. I like companies that sell products. I like companies that make money. I'm not saying you can't buy a company that doesn't make money and will make money down the road, but I like charts. I like charts to be around a while, so I could really do my due diligence on that chart. But I don't touch IPOs. I missed the SPAC move. But I didn't miss the SPAC collapse, and that might have been more important.
Did you make any money off of the FTX collapse recently since we last spoke?
No, I didn't make any money off of that. But, Bill, all of this stuff came to like a big crescendo, right? When you had like the Coinbase IPO, you had Robinhood, IPO of Robinhood. That just told me that where my math is right and we're going to get close to the bear market. And I nailed the bear market in the NASDAQ to the day. I gave it to my members, several months before it even happened. And I nailed the S&P high to the day. And I gave them that on the same day I gave them the NASDAQ top out several months before it happened. So, I was able to have a very good year where most people in a bear market, were absolutely trampled. So, that's just a testament to say I've been around a few of these markets now.
Your website is InTheMoneyStocks.com. If you like what you hear from Nick, he's a successful trader. I really appreciate touching base with him every month. When he comes on the show, go check out his website again, InTheMoneyStocks.com. Nick, thank you for joining me today.
Thank you for having me once again, Bill.